Thank you for staying with us. Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham, joins me as we unpack our next conversation for today. Thank you so much.
Yeah, good morning. Thank you very much for having me this morning.
Right. So Nigeria's capital market has increased significantly over the years, with total market capitalization rising 125% from about 55 trillion naira in April 2024 to over 123.93 trillion naira. We're talking 124 trillion even now. Now, how significant is this when adjusted for inflation and currency depreciation since that time?
Well, if you want to talk about currency depreciation, I don't think it will be right to actually use last year because as of last year, the currency has actually appreciated. Because if you remember, last year, April, the currency actually touched as high as 1,600 at the official window before we start seeing more like appreciation on the part of the naira. So when you look at it from that perspective, it's pretty clear that this has nothing to do with depreciation of naira, and I think it's more fundamental than that, because when you look at policies by the government, and also when you look at the part of the valuation of naira at that particular point in time, a lot of foreign investors were on the view that the currencies of the price, so some of them actually keyed into the market, and that's one of the reasons why we saw that level of participation in our stock market. So it is not totally about depreciation of currency. I would say it's more like a valuation gain on the part of the stock. When you look at the performance of most of these companies, when you do more like a bottom-up approach, when you look at the company, look at the industry, you will notice that they're actually performing very well. And you look at the level of result being shown that by most of these companies, and these are some of the things that actually lure most investors into the market. So I will actually tilt towards more of policy than depreciation of naira.
Well, that's quite interesting. Now, looking at this growth we have seen so far, how inclusive is it when you look at sectors?
Well, if you look at sectors, I think it's abroad. You look at it totally. When you look at what happened in the oil and gas space, and I think a lot of reform in that sector is actually spurring a bit of activity in that segment of the market. You look at names like Aradel, you look at names like Seplat, you look at the level of acquisition that some of these companies are actually making. You look at the level of expansions, both moving from pure oil into even diversifying into the gas segment as well. So when you look at that sector actually rank as one for me. And also when you look at what's happening in the telecommunications sector, don't forget, like about 2-3 years ago, MTN was actually going through that rough patch. That was when they were facing this depreciation of naira impact. At a point in time, the shareholders fund actually went into negative. But when you look at it at the operational aspect of the business, you know that it's actually a very strong business, and they've actually demonstrated that this year. They've been able to actually negotiate the band, move from negative shareholders fund now back into positive shareholders fund, and even they actually declared dividend last year, interim dividend last year. So when you look at the telecommunication sector, that's also another sector. Another sector is the consumer names as well. There's a lot of activity going on in the consumer names as well. A lot of companies are actually negotiating that bed. Don't forget, like about 2 years ago, we are all here talking about how FX are actually impacting most of these companies. But the stability of this currency, one way or the other, currently is actually bringing light and bringing smile into the face of most investors in that segment of the market. So when you look at it overall, it shows that all sectors are actually performing very well. The banking sector is not an exception. The recapitalization of the banking sector is actually a plus to that sector. So they have more fun now to actually sweat out and to actually for them to actually make more profits. And the insurance sector as well, they've been mandated that they need to recapitalize, and we'll be seeing a lot of activity in that segment of the market as well. So it is not, of course, you can rank in terms of contribution, but overall, the whole market is actually enjoying that level of turnaround.
All right, thank you so much. Just before I let you go, I mean, the SEC boss was talking about it's good that we have what we're saying now, but then beyond that, there are other things, maybe depth and all of that. I'd like to speak on depth in less than 30 seconds. How do we improve depth of the market?
Well, and I think that falls in the purview of the regulator in terms of the float of some of these names. There are names in the market that they are not that they don't have adequate floats into the market. Of course, investors are actually seeing some of those names, and what that will lead to is that the free entry and free exits into the market, you may not be able to actually enjoy that. So I think the regulator needs to actually work around this. Maybe they need to increase the level of floats that issuers need to have in the market. I think currently it's around 20%. They need to actually up it to maybe about 40 to 50%, so that that will help the liquidity in the market. Because for any market to actually be able to actually discover pricing, there need to be liquidity, and for there to be liquidity, there need to be debt, and for there to need to be debt, it simply means that the float into the market is actually sizable.
Thank you so much, Oladipo Ajayi, Head, Fixed Income and Forex, Chapel Hill Denham Securities, for sharing your thoughts with us today.
Thank you very much, Peter, for having me this morning.